Investing in stocks is a great way to grow your wealth over the long term. However, it's important to diversify your portfolio and not put all your eggs in one basket. Additionally, it's crucial to focus on long-term goals and not get too caught up in day-to-day stock fluctuations. Stocks, which are also called equities, represent an ownership stake in a public company and can be bought and sold on various exchanges by the general public. If you own all the shares of a company, you have control over how it operates. The stock market is a marketplace where people who own shares in a company can sell them to investors who want to buy them. This trading takes place on a stock exchange, such as the New York Stock Exchange or the Nasdaq. In years past, traders used to go to a physical location, the exchange floor, to trade, but now virtually all trading takes place electronically. When you invest in stocks, you're buying a piece of a public company. These small shares are known as the company's stock, and by investing, you're hoping the company will grow and perform well over time. If this happens, your shares could become more valuable and other investors might be willing to buy them from you at a higher price, earning you a profit. So, how to start investing in stocks? One of the best ways for investing novices to learn is to start small with an online account. For the price of a single stock or even fractions thereof, you can begin to trade and get a feel for the market. Additionally, many brokerages offer paper trading, allowing you to simulate stock market investing before risking any real money. Stay with me for the next few minutes and find out the 6 most important steps you need to take to begin investing. Decide how you want to invest in the stock market. There are 2 main ways to invest in stocks: doing it yourself or letting an expert do it for you. If you want to be hands-on and involved in every aspect of the process, from research to placing market orders, then investing on your own is the way to go. On the other hand, if you want someone else to handle most of the decisions and do the heavy lifting, then working with a broker may be a better option for you. Choose an investing account. Once you have decided which investment is right for you, you can open a brokerage account to begin buying stocks, funds, and other investments. Online brokerages are typically the quickest and most affordable option. Learn the difference between investing in stocks and funds. Mutual or exchange-traded funds for stocks. Investing in mutual funds enables you to buy a variety of equities in modest amounts all at once. A type of mutual fund called index funds and ETFs follows an index. For instance, a Standard & Poor's 500 fund mimics the index by purchasing the shares of the firms that make up the index. When you contribute to a fund, you also get a minor stake in each of those businesses. To create a diverse portfolio, combine different funds. Keep in mind that equity mutual funds are another name for stock mutual funds. You can purchase a single share or a small number of shares to test the waters of stock trading if you're interested in a certain firm. It is feasible to create a diversified portfolio consisting of several individual equities, but it requires a sizable investment and extensive study. If you choose this path, keep in mind that there will be ups and downs for particular stocks. If you choose to invest in a firm after doing your homework, if you become nervous on a bad day, remember why you chose that company in the first place. The upside of stock mutual funds is that they are inherently diversified, which lessens your risk. For the vast majority of investors, particularly those who are investing their retirement savings, a portfolio made up of most mutual funds is a clear choice. Stock mutual funds have the advantage of being naturally diversified, which lowers your risk. The obvious choice for the great majority of investors is a portfolio composed primarily of mutual funds, especially for those who are investing their retirement resources. Set a budget for your stock market investment. How much cash do I need to begin investing in stock? Depending on how pricey the shares are, you will need a certain amount of cash to purchase a single share of stock. Share values can run the gamut from a few dollars to several thousand. Exchange-traded funds, ETFs, can be your best option if you desire mutual funds but have a limited budget. ETFs trade like stocks, so you buy them for a share price, in some circumstances, less than $100, but mutual funds sometimes have minimums of $1,000 or more. What amount of money should I put into stocks? Have we stated that the majority of financial experts urge you to invest through funds? If you have a lengthy time horizon, you can dedicate a sizable amount of your portfolio to stock funds. An investor aged 30th of may invest 80% of their portfolio in stock funds and the remaining 20% in bond funds. Another situation involves certain stocks. Keep these to a minimum as a general rule of thumb for your investment portfolio. Focus on investing for the long term. One of the most effective strategies to increase money over the long run is through stock market investing. Over several decades, the average annual return on the stock market has been around 10%. But keep in mind that's simply an average for the overall market. Some years will be up, some down, and the returns on specific stocks may vary. No matter what is occurring on a day-to-day or annual basis, for long-term investors, the stock market is a smart investment because they are searching for that long-term average. After you begin investing in stocks or mutual funds, the smartest course of action may also be the most difficult. Don't look at them. It's a good idea to break the habit of continuously monitoring how your stocks are performing multiple times a day, every day, unless you're attempting to defy the odds and win at day trading. Manage your stock portfolio. There will be moments when you need to check up on your stocks or other assets, even if worrying over daily changes won't do much for the health of your portfolio or your own. If you use the following techniques to acquire mutual funds and individual stocks over time, you should periodically review your portfolio to make sure it still meets your investing objectives. Some things to think about: if you're close to retiring, you might want to convert some of your stock assets to fixed income investments that are more conservative. Consider purchasing stocks or funds in a different sector to increase your portfolio's diversity if it is overly concentrated on one industry or area. Finally, consider geographic diversification as well. Vanguard advises having up to 40% of your portfolio's holdings be foreign stocks. To have this exposure, you might buy global stock mutual funds. It's a long way ahead of you for sure if you are just beginning to learn about the stock market. It's important to do as much research as possible and establish your objectives. Discover what kind of investor you want to be before investing even $1. Then research even more. If you are going to invest directly, it's always a great idea to get the advantage of the paper trading mode available at most of the common trading apps and brokers. Always use trusted sources to keep yourself informed. Don't be afraid to ask for professional help if you feel insecure about large investments. Hit the like and subscribe button and don't forget to ring the notification bell, so you can be up to date with our videos.